The announcement arrives quietly, yet its implications ripple through the corridors of finance. The U.S. government officially designates silver a strategic mineral, an unspectacular notice to most, but to knowledgeable investors, it is a signal worth heeding. Headlines and financial blogs flicker with commentary, tracing parallels to the gold confiscation order of the 1930s. Old black and white photographs of Americans lining bank counters to surrender their gold edge into public consciousness, underlining the gravity of resource reclassification. Financial analyst Derek Cheng sits before 3 computer monitors, coffee in hand, scanning technical charts. He's well acquainted with market history and recognizes patterns. Silver, he tells his clients over a webinar, has recently surged. Technical analysis suggests that $99 is within reach, but he warns of overextension. It's critical that investors don't get pulled in by short-term hype, he cautions. Markets overreact, and silver is no exception. A prudent entry awaits the inevitable pullback. The legal framework for strategic minerals is dissected in professional circles. Derek receives a call from a retired judge, Regina Myers, who wryly points to the relevant statutes. They discuss Executive Order 6102, the gold seizure of the 1930s, and the potential for echoing actions regarding silver in a future crisis. Unlike gold, silver permeates industry. It is a conductor, a catalyst, a necessity for countless critical applications. Derek and Regina agree. If supply chains falter during an emergency, the government may act. Financial hardship in America casts a long shadow. Across town, young couple Mark and Tanya review their budget. Despite both working skilled jobs, they realize, according to a recent economic study, that $136,000 is now regarded as the new poverty line in many cities. Their investments in silver and gold feel less like speculation and more like self-defense. They want to strip away the middle class, Tanya says, echoing warnings from financial media. Mark nods, considering how quickly regulations can change and wealth can be redefined. Derek's clients gather on a video call. The discussion intensifies around short-term trading strategies. Take profits on the S&P 500 downturn, he advises, pointing to looming signals of a market correction. Yet he also stresses risk management. Profit is meaningless if lost in a panic. Never over-leverage, never ignore the tax man. The atmosphere grows tense as clients share stories of overtrading and asset mismanagement, with some referencing friends who fell prey to get-rich-quick schemes. Derek guides his clients back to fundamentals. Scarcity makes value. Diversification brings security. Complacency destroys portfolios. Meanwhile, legal analysts issue somber bulletins. If silver's status as a strategic resource is invoked, private holdings could come under scrutiny. Mark and Tanya, hearing these warnings, reconsider their storage arrangements. They contemplate foreign vaults, offshore diversification, and the importance of compliance.